Hi, everyone. This is Mish Schneider, Chief Strategist of marketgauge.com, coming to you on Monday, April 8th. And all anybody can talk about, of course, is the solar eclipse. But there is a couple of other things happening. And what's so interesting is that the weekly charts, as we're into spring, look like they are consolidating and could spring either up or down, depending. But the reason why I'm bringing this up is because not only is it happening in so many charts over the last several weeks, but it also is happening at a time when we have a lot of new news coming out, starting with earnings season, of course, more talk again about a credit event with yields going up, commodities, obviously, exception to these rules, already broke out of these massive consolidations. And of course, we also have earnings season starting as well. So there's a lot to unfold, and yet we can so easily put that aside and just watch this consolidation, which when it happens at near all-time highs or all-time lows, is probably one of the most explosive patterns to follow. So what I'd like to do is go through my economic model family. If you take out a pen or your computer and write down these levels, these would be the levels that I would be looking at. So let's start with Granny Retail, which is the symbol XRT. Again, smack dab in the middle of a range here, miraculously held 74.50. That's the number you have to watch. If she breaks down, and I say she because she's my granny in the family, then I would consider that to be duly worn because this represents the consumer, discretionary and consumer staples, right? So if that breaks down, that tells you there's something definitely going on. Over 79.80, it starts to look really great. If we move over to Grandpa Russell, 2000, that's IWM. Why are small caps so important? Yes, there are small caps that are doing better. Those have good earnings growth, but most of the small caps have been massively underperforming. And so right now we have a tremendous amount of support in IWM at 200. That would be the number that it would have to hold. And of course, if they do hold, buying dips is an opportunity. And on the flip side, unless it gets through 212, it's not really showing very much other than this massive chop zone. If we move over to biotech, interestingly enough about biotech, which symbol would be IBB, that's not necessarily a key indicator to the U.S. economy. It's cyclical and non-cyclical. But right now, it actually already broke down on this weekly consolidation. Shades of things to come? We don't know, but 134, 135 is where it broke down from. So if it gets back through there, could be an interesting reversal back into that consolidation zone. Then if we move on to semiconductors, now clearly semiconductors has been the winner. We call her sister semiconductors, and that also has been in a range. So right now, 240, that is the number that semiconductors would have to clear in order to see a new leg up. And on the flip side, really has to hold at about 210. And then if we move on to transportation, what's interesting about that, which would be IYT, is like the retail and like the small caps, very U.S.-centric in terms of how goods and people are moving. So it's a great example of supply, which would be more on the grandpa side, and demand, which would be on the transportation side. So IYT is the narrowest of all the trading ranges right now, hasn't done very much. So really needs to get through about 75, and on the downside really needs to hold about 67. So right now, that too are numbers I would watch carefully. And then finally, well, I shouldn't say finally, we have one more member to cover. But regional banks may be, besides Granny, the other most important one. And the reason is because, yes, we have big banks reporting. But there has been this buzz about this credit event, and regional banks have just not participated ever since the debacle last March. We do have an auspicious anniversary potentially here. And yet, it hasn't gone down either. It's been trending between 45 and 50. And the reason why this is so important, because if it breaks down under 45 and XRT breaks down under that 76.50, I don't care how bullish people are, I would consider that due warning that we're in for some correction. But on the other hand, if Granny holds and breaks out and KRE can actually get through that 50 level, then there's no reason why recent calls for 5,500 in the SPY couldn't happen. And finally, we do have Bitcoin as part of our family. Now, Bitcoin did kind of peek its head out over 70,000, went up to 72,000, which is slightly above that weekly range that it's been in between 63 and 70. However, we're talking weekly ranges here, so we would want to see this solidly hold above 70. And if it does, clearly we know 74,000 has been the recent highs. It gets through there, then I think we are looking at another leg up in Bitcoin as well. So that, I think, is probably, from my viewpoint, the simplest, easiest, and most reliable way to really understand what's going to happen in the market over the next few days and weeks. Now, in terms of commodities, I don't have to tell you at this point. We've been talking about the miners. They exploded higher, getting a little bit of a rest. Silver continues to go up. Gold as well. Oil is kind of now above that $85 a barrel if you're looking at WTI. It hasn't really gotten through the 90 yet, and that's going to be very geopolitically sensitive at this point. I wanted to talk to you for a second about natural gas, because talk about ranges. This is what interests me the most. And what really makes you the most money is when long-term ranges break out. Now, this isn't necessarily having the same sideways consolidation, but it's been basing for a long time. And the chart shows a 200-day moving average, which is in green, that has not been, price has not been above since October 2023. So that's kind of a long time, right? That comes in at 195. If we get a couple of closes above 195, and I'm talking May contract here on natural gas, then that could be, as it's energy-based, the next one to make a move higher. Will it go skyrocketing like it did in 2021? Not necessarily, but it might offer you a very low-risk opportunity to be looking at levels maybe back up to about $4. And so remember, keep an eye on that 195 level, and keep an eye on those consolidations that was talking about in not only the economic monitor family, but you'd see it in SPY, you'll see it in NASDAQ, you'll see it pretty much in almost every ETF. Okay, that's it for now. Hope you have a great day and a great week. Thanks so much for watching.